Welcome back to New South Wales Government's Business Connect webcast on business disruption. My name is Steve Waite, a Business Connect advisor and CEO of the Business Centre. Business Connect is a dedicated and personalised New South Wales Government program that provides trusted advice to help you start, run, adapt or grow your small business, and is delivered through a network of independent service providers across New South Wales. If you would like a business advisory session subsidised by the New South Wales Government under the Business Connect program, call 1300 134 359 or email connect@treasury.nsw.gov.au. So the episode topic that we've got today is business recovery and cash flow planning. In this webcast, we'll be unpacking what the best steps are to take you and your business in a healthy cash flow into the future, past COVID. We'll be walking through how to navigate your business finances as you reopen your business under the requirements of the ATO and the Office of State Revenue, so you and your actions and decisions over the last 20 months under COVID-19 don't have any long-term effects on your business. We will, with our special guests, then discuss simple financial strategies you can adopt to make sure you recover and sustain your business through this reopening landscape now and beyond this COVID disruption into the future. So on behalf of the Business Centre and the Business Connect program, I would like to share a little bit about our expert guest's background before we get started. I'm delighted to welcome Barrett Campbell, owner of Balance 123 Accounting and Advisory, to take us through the current financial challenges facing small businesses and to demystify and navigate through the government support that has been in place and we continue to work through and navigate through during this next stage of COVID disruption, recovery and reopening. Barrett has 15 years experience as an accountant. He founded Balance 123 in 2018. The business specialises in providing virtual CSO services, as well as providing a range of services such as business advisory services, accounting, tax planning and financial compliance. In fact, he is the virtual CFO of the Business Centre. So let's make a start. Barrett, many businesses are feeling relieved. They felt overwhelmed as they've tried to manage this reopening through the period of COVID-19 and the pandemic. But what can they do to make sure they do the right thing when it comes to following the rules and requirements? Because we've been through various grants, we've been through various stages of this pandemic. There were some allowances, there were grants that people could apply for. So what do people need to now account for, and what do they now need to report upon? So if we could just recap, take us back to those couple of Sundays after we had the pandemic announced, and one Sunday we had $3 billion announced, and then a month later we found ourselves with JobKeeper. So take us through to where we are now from that stage and what our obligations are. What have I got to do the right thing as a business? Yeah,
thanks, Steve. You're right. It's been a bit of a journey. This COVID support, I think, both initially the federal government nationally rolled out a couple of schemes. Mm-hmm. There was a pay-as-you-go withholding cash flow boost, followed by JobKeeper. Yeah. I think both of those schemes have been really effective, and we probably saw the effects of those last year before we went into the most recent, Delta strain lockdown that we've currently had. Since the most recent lockdown, we've then had sort of mixed support, but primarily driven then by the New South Wales government, at least for businesses in New South Wales. We've had the JobKeeper scheme, we've had a number of various grants for businesses varying at different sizes. But I think what we do know is that probably that level of financial support is coming to an end. I don't think it's reasonable for any business owner at the moment to expect another round of any of this. Even if we were to go back into a lockdown or semi-lockdown, I think now with the states and the federal noise they're making around vaccinations and business as usual and post-COVID, that I think we're going to expect from now, 15th of December, that we're not going to get this sort of lifeline thrown at us again. So, I think it's been fantastic for some businesses. It gave them working capital when they really needed working capital to get through initial tranches. We've seen industries that have responded completely differently to other industries that have been hammered. And we've had things like construction that has just, been going hammer and tong. I think anyone involved in that industry at the moment is busier than they've ever been. But, I think what we need to be mindful of is the businesses that have really had to use this money and use it to its entirety in order to maintain employees, in order to maintain assets, in order to, even stay within their lease. They're the businesses I think that are the ones that we need to, really be focusing on re-kick-starting their business. And, I think that's been a little bit devastating, particularly some industries in particular. And, I think in relation to those grants, if you fully utilise them and now you're starting again, I think it very much is a case of you're almost starting again.
Yes.
And I think most of what we're going to talk about today is it's going to sound a lot like we're talking to someone who's never been in business, and we're going to be talking about things that really are what you would do if you were starting from scratch with limited working capital,
sound practices,
a limited customer base or limited opportunity. So
back to basics.
So, very much so.
So we're going to take a deeper dive into some of these obligations, and then we'll have a good conversation around that, ATO, Office of State Revenue, and so on. But also, where we can, you might draw upon some examples from your own work along the way. And then what we'll do is, we'll go to those fundamentals, and we'll look at your sort of 5 top tips, where we revisit some of the really essential elements that you needed probably to go back to that you might have done right at the beginning. Well, now is the time, more important than ever, that those are in place and that we're aware of them. Okay, so let's look then at the next question. So when we dig a bit deeper, what are some of the key issues that are popping up from these measures and the standard taxation obligations? So eligibility, acquitting, businesses that have done it tough, bank loans, this whole gamut. Just step us through that if you can.
Yeah, look, I think the most important thing now is that the funding's been paid. It's been either utilised or it's been stuck in a war chest. Two very distinct organisations have sort of governed this process. First hand, we've got the ATO, who are far more, I think, equipped than the Office of State Revenue as far as audit activity. I think it was demonstrated in their ability to roll something like this out. They're an organisation that has been very familiar with both collecting money and repaying money out. There's a balancing act we do every year where they collect some tax, and if there's a balancing adjustment, people will get a refund. So very well equipped to have done it, and they did it. Their response was quite timely. They did it quite well. Their back office is very similar to that, in relation to all of the taxes that they administer. Is, they've got a considerably sized call centres, in terms of people already employed who already understand the process. And then, they also then have familiarity with conducting audits, right? It's something that they do year on year, regardless. It's not and they do it in significant volume. So I think the main thing for small business owners is that you're retaining your records. We've made some decisions. Part of these were estimates that you had to use to qualify. There was, submissions you had to make. I think record keeping in general, as boring as that sounds, really, really crucial. So whatever those decisions were, make sure that they're written down. Make sure that information is going to be stored, because if you are one of the businesses that gets picked up as part of this audit, what you don't want to be is in a position where you now have to prove you were right. And the reason we say that is the ATO for a long time, and it currently has the power to say, this is how it is, Steve. You must prove us wrong. So it's very much a guilty until proven innocent, which is quite contradictory to what our normal course of civil law and criminal law. But they've had this power. And there's current talks at the moment of reorganising that power so that there's probably a slightly fairer approach. Now, that being said, they do work tirelessly to work with small businesses to get a fair outcome to begin with. I was about to say, before you have to. So from your experience, typically, and I guess this is where this is in some ways no different to any other period in time. So typically, with regard to a client that you work with, where they may find their profit and loss and their balance sheet might be a little bit not well kept, not through any intent or malice, they might find themselves in a problem where they've overestimated, underestimated, or missed a payment. Typically what happens, and maybe
talk to that a little.
Yeah. So for anyone who's not been in this position before, it's probably more daunting than it is in reality.
Yes.
I think every accountant will have a handful, dozens of clients who work with. Often the cause is they work with risky customers.
Yep.
So, and by that I mean they most of the time might get paid in a month plus 30 days, but then they also sometimes won't. And they'll, due to just the complexity of their contracts or variations, and they get pushed out another 30 days or another 30 days. Now, if that happens enough or it happens often enough, you can find yourself in a bit of a pinch working in terms of their working capital. So what's important to understand is the ATO does have a level of empathy that you wouldn't expect if you've never been in this position before. They are willing to talk to you about what your current situation is, how much you can repay to start making a payment. So they will, and generally are quite open to a payment plan or a payment arrangement in order to repay any outstanding obligations.
Could you, without naming names obviously of clients, but could you give us an example of that from your work,
absolutely. Look at, we have, and over the last 2 years, probably more so than ever, had to introduce clients to this concept of saying you have some fundamental expenses in your business. One of them is tax, one of them is the obligation. Superannuation for your employees is extremely critical, and that's a prime example. Let's make sure we pay the superannuation on time. That's something that doesn't belong to you, it belongs to your employees. Then let's go negotiate with the ATO and say, we would like to pay this off on a payment arrangement over 3 months, 6 months, and we'll pay it in instalments weekly, monthly, fortnightly.
So is that negotiated? I mean, are they really willing to say, look, I can't afford my cash flow?
They really are. And the size of your debt changes the scale of those negotiations. Also your history. If you consistently, put a payment arrangement in place and then cancel or don't meet the obligations of that, you're going to have a hard time renegotiating with any lender. And that's much the same. They have softened. They used to be very strict with payment arrangements in that if for banking reasons your payment was 1 day late, as far as they were concerned, you have broken the payment arrangement, and that's a default. That now is no longer the case. So they are very flexible. There's less to be fearful of by being on the front foot and engaging the ATO than there is of ignoring the problem or hoping you solve it before someone notices.
Indeed. So the same would apply now as it did then.
Yes.
So we're not really scaremongering around people that may have miscalculated or found themselves not across all of their reporting. Being forthright with the department now, because we do understand that there's probably some correction and there probably are some audits going to be coming out of JobKeeper. And before we get on to JobSaver, so
that's the primary thing. Is if you notice an error in your calculations or applications previously and you want to correct that error, that is an option. And again, it's by communicating it with the ATO before you're told you're in the wrong, you're going to have a genuine leniency towards any penalties, interest. If they come and find you in 2 years' time and say you got it wrong, we don't know. The ATO changes, right? Through the time we've been involved. Sometimes for years they've been very lenient and on penalties and interest and remit and very sympathetic to small business. Then they might go through patches where. Their instruction is to not be as lenient on interest charges and penalties. But what you do know is that if you do proactively engage with them first, they have a very good history of being reasonable and
So say at the end of this process, I find myself, and I may need to recapitalise my business, and I go to wherever I'm getting my finance from, and I get a loan or an overdraft or an advance of some type of some credit. Say I'm using that then to pay a tax bill. How does that fall in the ledger? How is that treated? What happens then? I've got a loan, it's come in as income.
Yeah, look, there is, and there's plenty of businesses that do that. I mean, that process of getting an overdraft, if the primary purpose of that is to meet tax obligations, I think the first step would be to engage the ATO themselves and put that on an arrangement. So, I mean, you can get an arrangement that spans out to 3 years.
Okay. Yeah.
The primary objective that they're trying to achieve is, if we put you on this arrangement, does that now mean you can meet all your future obligations on time?
Yes.
And that's the important part. So you don't want to go underprepared to them and say, just put me on a 3-month arrangement, and then you can't meet that 3 months arrangement, or there's a monthly bill due and you can't pay that. Because you're going to default on the first arrangement, and all you're going to create is a poor credit history.
So amortise it across a reasonable period of time.
And what is, and there's plenty of accountants out there and advisors who know this, is that the ATO in some respect is probably Australia's biggest small business lender. They constantly have small businesses that owe the money for short periods of time, long periods of time, and there is an avenue there of smoothing working capital by negotiating with the ATO and doing it properly. Yes.
Okay, so that takes us through that the PAYG W cash flow boost and JobKeeper scheme, but then we then come to the New South Wales government's more recently related small business grants and JobSaver scheme, and the mechanism and the interplay of that. So so I get a grant. I've got JobSaver. It's dropping into my business. How's the ATO treating that? What's that looking like to them?
Most of those state ones, I think, do incur tax. I think the COVID cash flow boost didn't.
The grants.
Actually, I think JobSaver they might not have. Sorry, mate.
That's right.
But I think the key thing with the OSR, most of those applications are done, they're dusted. We now have, if you are still in JobSaver, or the last few little bits of JobSaver, you did have some extra reporting you needed to do to get the payments, but essentially that should all be closed off. And then, historically they probably don't have as open and friendly a record as maybe the ATO does in terms of issuing penalties and in terms of pursuing interest. They have typically been quite strict. I'm not sure how they're going to administer or audit this.
So I guess small businesses, as they have throughout this, and to recognise the support through Service New South Wales, small businesses should contact Service New South Wales, I'm sure, as they would with the tax office early and clearly with regards to where they're at.
Yeah, and look, I do believe they have a... now, this is such a broad scheme. So typically they've administered duties, which very much are a factual, you either owe the duty or you don't.
Yes.
Right? They're like a levy or a duty. It's it's quantifiable. It's easy to identify. So they've administered that, which is why I think there's such a history of being quite strict on the point. This is your assessment. This is what you owe us. You got it wrong. I think with JobSaver and their audit process moving forward, I think there is going to be more flexibility in
I think
trying to recover the money in that regard. They've put a lot of extra resources into their call centres to try and manage the uncertainty. So it's a little bit of an unknown, but I think the main thing, like the ATO, is I think you've got to get your own house in order. So,
which is where you sort of take this. You've recommended that people get their compliance obligations up to date, and ensure they know where they stand with regards to their existing debts and financial statements and tax returns. And then you talk to then just reviewing things. So what do you mean about that, reviewing, refinancing? What are you talking to there?
I think one of the critical things at the moment is, if you've got some uncertainty, is let's try and take out some variables, right? So is there an income tax liability? Is there a refund owing? I think a lot of businesses who haven't got their compliance done at this stage maybe are unaware that they might have a refund or cash that they can actually get back into their business. There have been some very generous depreciation changes, which are driving a whole wave of either instalments you've paid in advance now coming back to business owners. And then following that, if you're going to seek finance commercially, the first thing they're going to want is give us your most recent financial year, give us your tax returns, give us notice of assessment. So you want to give yourself the best chance of getting finance, having that in order, understanding where things are is going to give you the best chance to do it. And then when you're talking about, do I need finance, where are we going in this, I think having those baseline numbers gives you then a way to work forward and decide, okay, we're going to refinance this asset, we're going to go and seek out finance, or we're going to need new working capital, and and I think that just talks to having good budgeting and forecasting as well.
Which are the fundamentals which we're
which you would get anyone to do if you were setting up a business plan. Set up. Can you do a forecast of what your business is going to look like if you were going through that process?
So. Have you had any experience with the work that you've done recently? I know that the safe harbour provisions and businesses that were up on the edge Have you had any insight on that?
No, look. Fortunately, we've not been heavily involved in that space.
Yeah.
I think,
but there are people that can give advice, aren't there?
Insolvency practitioners, you know, ideally going to be probably
and it's quite technical, isn't it, with the changes they've made? So it's important.
Yeah, it's its own area of expertise, insolvency and liquidation, and managing that transition to administration with companies, and you know, I think if you do have significant creditors chasing you and you feel like you're going under, I think you know, they do work with you in a consultative manner
to navigate out of it.
This isn't pick up the phone and you know, you're calling in the Seven Horsemen. This is you know, a consultative approach to getting your business back on track. And there's several practitioners around town who are fantastic.
Okay, so we spoke at the beginning about the environment that we've had to transverse through, and now we have ticked off, I guess, on the regulatory and the obligations that we're likely to have had to address, or will continue to need to address, to get through to the next financial year. But let's go where we began when we spoke about fundamentals and what you've done, and I'm just going to guide us through this with your help. The 5 top tips to help people manage their businesses right now as they reopen and recover. And the first one that you've highlighted for us is manage your cash position, your budgeting, your forecasting. So what do you mean by that?
Look, I think there's a lot of businesses that have, you know, up until this disruption or without any disruption it's been quite easy. You know, business has been quite predictable without being too predictable. They haven't needed to count every cent. And that's a tiring, you know, I think anyone who's been new to business, or when you first started your business, it's a very tiring thing to be taking stock of every penny and trying to work out when you can pay a bill, when you can't. And most businesses mature, they get to a point where it's just comfortable. They have, you know, probably more working capital than they need. Simply out of the fact that it means they never really have to think. We see that quite a lot. Business owners will have $100,000 in a business that needs $20,000 worth of working capital. But the reason they leave it there, the reason they don't necessarily do anything with it, most of the time boils down to they don't want to have to be back in that position that felt so uncomfortable when they first started.
On the edge.
And say, you know, can I pay this bill? Maybe I'll pay it next week. So what I think you want to do, just as a starting point, is try and predict the future. And it's never easy. There's a number of ways, you know. I think, you know, most of the business advisors through the Business Connect program can help people build the bones. Start with something simple. You know, I think everyone sees the final product most of the time with one of these, or they've seen the larger scale. And even those larger models start with very simply trying to build it either from the bottom, if you know your cost structure, or from the top, if you know your revenue, and that sort of drives your cost structure. Start simple, add to it, identify point of weaknesses. You know, if you wanted to start a budget and you said, next month we'll have $10,000 worth of sales. Test the assumptions. How did you come to that? What's the driver? There's got to be a reason you think it, or the reason you're estimating that. And slowly whittle away at those assumptions till you feel they're okay. And then factor in GST, pay-as-you-go withholding,
tell us more about that. Sometimes it's a trap that some people fall into, and they don't necessarily account for that with regards to money in, money out, predicting and.
It can be relatively tough. It can be quite tough for people who. You know, just BASs in general can be quite a tough concept for people if all they do is, or majority of what they do is providing a service. So you have labour as your real cost, which you're withholding tax on behalf of your employees that you've got to pay every quarter or every month. And then if you're registered for GST, all of your sales, 10% of your top line, you know, what's on the docket isn't yours to start with.
No.
So it does feel when you get to that end of quarter, I am paying this massive amount of tax, but there's two key parts to it. One is the GST, which was never yours to begin with, and the other part's the pay-as-you-go withholding, which is your employee's salary that you've withheld on their behalf of the ATO. So neither of those things belong to you to begin with. So it's changing your mindset and understanding that this isn't me being penalised. This isn't something I've done wrong. This is actually, it's not my money to begin with, and you're, you know, partly a custodian on behalf of your employee and the tax office in your relationship as a business. And once you sort of tackle that mindset, it maybe becomes a little bit less fearful and something you can address more proactively. And what you want to do is, once you've worked out roughly what you think your income and expenses are going to be, just factor in that you also then every quarter are going to have this lump of cash that has to come out.
Yeah.
Every month you're going to have finance commitments that come out.
Yeah.
So not just that profit, but we really do want to be looking at what the net cash that you're going to generate out of your business.
So bring that back into the business in a little bit more of a realistic way, and forecast off that once you talked to that about accrual accounting.
Yeah.
So basically taking more of an account of how that moves through your business in a more predictive way, rather than as you say this, oh my God, I've got to pay this.
Yeah, look, it is one thing that if you can change your mindset about that, it becomes less, leaves less of a sour taste in your mouth, and then you're more likely to then sit down and actually think about it. But if it gives you horrors and nightmares, you're going to want to avoid it, and you're never going to get to the task.
All right, now one of the other things you talk to here is seeking reductions from fixed cost suppliers, rent, software subscriptions, etc. So what have you seen work there?
Look, I think in the space that we're in now, bedding down your relationship with your suppliers isn't a bad thing. I think there's a lot of industries that even if they're doing really well, they're really struggling from a supply aspect. And then even a lot of businesses that have pivoted and doing really well, Steve, are now struggling with a distribution problem.
Yes.
Which is the post office down in in Sydney at the moment. Warehouses of your distribution channel is being upset, and you can do a couple of things about that as a business owner. This is a prime example of disruption. There's the greater disruption we've got, but this is now a disruption to your distribution channel. Do you continue to use Australia Post now, knowing that you're going to send out products to your customers that they're not going to get for 2 or 3 weeks? Or is there an alternate you can offer someone? Say, hey, look, I know this is going to cost you twice as much, but you will definitely get it in 3 days.
Yes.
If you're offering that, versus what your competitor's offering, you're potentially going to get the type of customer everyone likes. People who aren't afraid to spend money to get what they want.
Yes.
Who can see the value and understand it.
And you've got to cost that, so you could start
something
to cost
as simple as that. You're talking about Australia Post is one of your suppliers. What do you do about that? Do you leave it to fate because it's easy or do you sort of tackle that head on? Likewise with customers, really think about their customer experience. If you're like this, if your business has shifted now to an online model of distributing product in that fashion, then maybe their customer experience is being harmed. And because of the supply you're choosing, or you're then on selling, that supply. So, it's a prime example that comes to mind.
Okay. Now, one of the other things you've alerted to us is regards to an investment in software and processes. So, what have you seen out there in the work that you're doing?
Look, I think it talks probably to the start about record keeping and being accountable for the decisions you're making. I think it's really important, if there is audit activity over the next 2 or 3 years, but likewise, it's a good opportunity to see if you can streamline your process. Is there any way you can use software to relieve your time, and is there something better you can be doing with your time? Now, fundamentally, as accountants, we're saying to, our advice to anyone is get a really good accounting system. Because it's going to make your advisor's job easier, it's going to make your job easier in the long term, and that's going to give you quality of information, and higher quality information normally leads to better decision making.
So communication, rostering, all of these things can be done through a lot of software.
And I think most people have adapted out of lack of choice, right? We've been introduced to Microsoft Teams and Zoom. That's something that's really been pushed along by this disruption.
And then you talk about efficiencies or inefficiencies. What sort of things have you seen that people have managed to tackle at this time?
I think one of the big ones has been inventory management systems.
Yes.
Now with a change in how you're engaging with your customer from both an online store to just what's in the shop. I think what we've seen a lot is our retail customers really saying, okay, we need something a bit more sophisticated here. We can't just have a shelf for everything and do our ordering on what we're seeing, because we've got people not walking into the shop. It's happening online. We need to be able to control that communication on if we don't have it, let's tell them before they bother going through the process of trying to pick it out and ordering it. So that's really been the biggest one, is inventory management systems been upgraded. And
that's a good insight. Okay, so that takes us a little bit into the next area that you want us to work through, which is leaning into disruption. And so tell us a little bit about what you mean there. We've spoken about online presence. But what else do you mean in there around, pricing, discounting?
Yeah, look, I mean, that's been a big one, right? So, online presence is obvious one. Let's engage in online presence. Great. Yep. Now what?
Yep.
I think there's a huge opportunity now for businesses that have to really lean into the fact that they now have reduced the geographical limitation of what they used to do. What they used to do was work in a local area or a specific community and do a specific thing. Now the next step, the next thought of that is, okay, well, maybe now you need to drive your marketing or awareness campaign beyond word of mouth locally. This now needs to be an online, nationwide approach
because they can.
Because you can, and because you've done the hard work. So now capitalise on it by sort of taking the next step. We've had one client in particular have a huge amount of success by moving to telehealth really early, adopting it very, very quickly. They are very similar. They've now removed their geographical reach. The area they work in is very niche and very specialised, so they're now able to actually provide that service nationally.
Wow.
Rather than just locally and just, within that geographical limitation. So, that online, the power of the internet's great. But, look, I think the one thing, the conversation we probably are having more often than not is the competitiveness in some of these industries that are being highly effective is causing people to really consider discount pricing.
So tell us, because you got a take on that's interesting. So take us through what you mean.
So discounting, has always been a mechanism of, there's been a connection between if it's cheaper, more people will buy. So you will sell more if it's cheaper. I think most people have that link in their mind. And where it's really, really dangerous is, where we get it introduced to us probably first and foremost is often in a retail setting. And what most people probably don't understand is the cost of what they're selling you, what we'd call the margin, is very high on those products. It might be 80%, 90%. Something costs $5 being sold for $50. So when they discount at 10 or 20%, that's not, and they're able to then move more. And that's not too damaging to their margin. They only have to move maybe 8 extra T-shirts. Instead of 40, right? So they might sell 50 shirts instead of 40 shirts. And they'll do that by doing, 2 for 1. So now maybe they've got to sell 65 instead of 40, but they're going to sell 80 is their logic, right? So they're going to sell 80 instead of selling 40, but they only need to hit 65. So they're actually in front because they're making enough margin, they're moving more volume. The problem you have is if you're a services business and, you've got out of your sale less your wage for what you do, you still also need to cover things like, your income tax liability. And so you also have a margin built in inherently in what you're doing. And that margin is going to be closer to 30 or 40%. Now, when it's the lower that margin is, taking 5% off the top means in a lot of cases, people are going to have to, when we calculate the maths, do almost 50% more work. For a 5% discount. Or 10% more likely to do 50% more work, but for 5% maybe 20, 25% more work. And if you're selling hours or selling time, that really means, if you take 10% off your price, you're going to have to find 60 hours worth of work in a week anyway. But if you're only planning to work 40 and have a life balance, the discount is actually not ever going to help you achieve it because the volume of work you need to do in a shorter period of time, if you've got a limitation of resources, isn't going to work. So it takes us right back to the forecasting and the budgeting, doesn't it? If you're going to do that, do it thoughtfully and look at the implications. And drive those levers, try and work out how you're going to achieve it. Okay, as you say, don't discount unless you understand and plan for this. So asset protection, what do you mean there? There's about 3 elements within that you wanted to raise with us. What do you mean by that? Look, very much we're going back to almost redesigning our business in a lot of cases. I think there is some genuine opportunities for people to consider what the right structure is moving forward. Potentially businesses that are strong or have a lot of potential to reinvigorate their business, but the value of their business is maybe at the lowest it's ever been because of disruption. It's potentially a good time to consider a restructure if it's something you need. I think it's good practice to consider if your structure is effective, and not just for asset protection, but whether it's effective in terms of remunerating both the owners and employees within it. There's a lot of things you can take into account, whether it's mitigating some of your trading risk, whether you're protecting your family in whole, and it's never a bad time when you're revisiting your structure to really consider succession and estate planning. What do you have everything, checks and balances? If we're going to look at this every couple of years, is everything still in order? Your will's still in order? Are they still relevant? Like, do you have mum or dad as your executors, but one of them's, not in the best of health or passed away? Revisiting those frequently, I think's important for every business owner. And if you're about to go and undertake a borrowing exercise, borrow more money, reinvigorate your business, again, really good time to think about your asset protection if you're going to take risks.
And how you treat that debt. Okay. All right, firm up relationships is the last area that you've spoken to us about in regard to some tips. So what do you mean by that? Tell me more about firm up relationships. What exactly does that mean?
Yeah, so I think we probably touched on that a bit.
We have
before.
A little,
yeah. And look, I think that's the key. Is a lot of small businesses deal with other small businesses or small contractors, and whether they're your suppliers or your customers. I think spending your time bedding down those relationships. If you aren't as busy as you'd like to be,
so as people come out of this, as they begin to recalibrate, they should probably think about it.
Your relationship, identifying who your key customers are, trying to build some brand advocates for your little business. I think that's really critical. And I think what we're seeing is whether it's skills shortage that's driving it, but if you have contractors that work for you, bed down those relationships. Make them a strong relationship so that you can grow and know that someone's actually going to show up to do the work, that you're still going to have a supplier to provide or a contractor to deliver the service.
And I guess there's one of the next ones you speak about is reviewing your customer experience. And I guess if you've been using this time to review and to look back a little, and if you have got some good information about who your customers are, when they typically come and see you, what they buy, what's their favourite product, this is a good time to review that in this new era.
Yeah, absolutely. And that talks back to point one about software.
Yes,
right?
Yes.
If you want to really understand who your customers are or what they want or what's working really well, again, really good software. Even better if it talks to which products make you the most money, right? And they're all out there. There's multiple iterations of them, but actually using that information now is really critical. Should
small business owners, if they're a small business, quite small, should they be worried about this investment into software and digitising their business? Is it a big barrier?
No, it doesn't have to be. I think there is a lot of, as far as software goes, there's a lot of plug and play, self-learning, self-taught, self-implementing software that you can put into your business. But like everything, you probably get what you pay for. And what I would say to that is, if this is going to be primary part of your process of, especially if it's front facing or with customers or without, is maybe seek out an expert to help you navigate that process and consider that investment and what that's going to mean. Now, financially speaking, if it helps you serve more customers in less time or do a better job of serving customers, you can quite easily calculate the cost savings long term. But like anything, you will always get what you pay for. You pay for no implementation, then you're taking the responsibility to actually get that little database that works in the background to seeing. So.
Okay, and then the next couple that you talked to us about are about customers being your advocates and looking to tap into new networks and increase referrals. So what have you seen out there that's worked well there? I
think we're just now starting to see networking style events and community events, community sports. All of those things are now getting back on board. So something as simple as supporting your local sporting team or kids sporting team or your own kids sporting team, maybe donating a bit of your time in that space, letting people know who you are, what you're about, that you're looking for work, or that this is the service you offer. All of those little things really do build up a long-term, build up a strong network of people remembering who you are and what you do. So when when their moment arises and someone says, hey, do you know X, Y, Z? They go, oh, actually, there's this guy who's been heavily involved in our sporting club or been a long-term supporter. He's fantastic. And that's how that word of mouth works. So there's no... That's the issue. Like, that's the problem with word of mouth. They're the best referrals. They're normally the strongest. They normally come from such a good place, and they're unpredictable. And they take a lot. It does take a long time to build up a significant network. But like planting a tree, Steve, the best time to do it was 20 years ago. The next best time's today. So,
indeed. So you've taken us on a bit of a journey here, and I'm going to give you a chance to wrap up or touch on some things that we may not have covered to your satisfaction, but really what you've said to us is with regard to some of the benefits we might have gained through JobKeeper and JobMaker and some of the grants is to get our books in order, get a very good understanding of what our bottom line is and what our position is, and then start to rethink your business, look at where you can improve it, and come back to those fundamentals that we covered. So in your sense of it, is there anything further or anything else that you'd like to add?
No, look, I think the main thing is I think the reason people don't budget and forecast is that it's daunting. It's a daunting process. Especially if the business isn't in a position where it's trading really strongly and doing really well. Normally then most business owners see it as pointless because things are great. But when it is tough and you do need to put effort in and test assumptions, it's a lot of work. It's a lot of work for anyone to do that on their own business. It is easier if you get someone to help, whether it's your accountant, whether it's a Business Connect advisor to help you build that structure. It really does help to have someone else point at you and say, what about this? And that's my main advice with forecasting and budgeting is sometimes it's really hard to see the trees from the wood. Anyone who's experienced in that area can help you identify what we call drivers. That if A happens, that means B must happen. So how many of A do we have, and or can work backwards to build it. And very simple works extremely well. It can be 10 lines. It doesn't need to be every expense. People either go one or the other. They go, I'm going to have everything in here, my stamps. There's going to be, stamps are $1 each now. I'm thinking maybe 7 letters a month. It's like $8, and they're going to put that in their budget, and they're going to be happy. If that's not you, if you're a bigger picture thinker, or you're very active, or you're an operator, then simple main headline items. Feel free to look at past performance and say, look, there's all this. We can just group it together and call it X dollars a month roughly. It doesn't need to be to the letter. What you want it to be is to drive thought, and drive some of the conversation we're having after then with those 5 tips. Most of that for us, we do that business planning by looking at a budget, and then our assumptions lead us down the path of, well, how much are you going to spend on marketing? If we want to achieve this, we need to do this to do this. So get started, seek out help if you need help to get it done, and, continually revisit it. That's the main thing. Don't do it once and throw it print it out and put it in the drawer. It's not going to help. But
so more than a determining type approach, more an emerging approach, which is based on some assumptions.
Absolutely. And I think that's exactly right. You're going to start with a plan, and then we're going to kind of navigate your way there. If
we've learned anything from the last 3 or 4 years, we know that wherever you are at some point, you're probably going to have some form of disruption of some shape. All right, it's time for me to wrap up this webcast. First, I'd like to thank Barrett Campbell.
Thanks, Steve.
We'd like to again recommend the Business Connect program, which is a dedicated program funded by the New South Wales Government and delivered through a network of independent service providers to help you start, grow your small business. If you want a business advisory session subsidised by the Business Connect program, call 1300 134 359 or email connect@treasury.nsw.gov.au. All you need to do to access Business Connect is complete a registration form. Businesses can typically access up to 8 hours of support in a financial year, including business advice, live webinars, workshops and events. There is no cost for the first 4 hours of business advice. businesses affected by COVID-19 can access services free of charge. We thank and acknowledge the support of the New South Wales Government for the Business Connect program in funding the development and production of this webcast. Finally, thank you from me, Steve Waite, your host, and best of luck with your business in reopening. And thank you to Barrett. See you all next time. Thank you.